Well, the Dow Jones dipped slightly today after new inflation data showed that wholesale prices rose more than expected last month. According to the July Producer Price Index, wholesale prices rose 0.9% from the previous month and 3.3% from last year. That marks the largest jump since June of 2022. And CBS News senior business and technology correspondent Jo Ling Kent joins us now. Jo Ling, thanks so much for being with us. These figures provide insight into what is coming down the pike for consumers. So what do they tell us about how tariffs will impact prices and how they are already doing so?
Well, this was quite a bit higher than what Wall Street was expecting. So it was a bit of a wake-up call on inflation because these wholesale prices reflect, what is coming down the pike for consumer prices, for the price that you're paying at the store, right? So if you look at what actually drove this up, trade services went up as these tariffs were going into place. And, this could give the Federal Reserve a bit more pause when it comes to what they should do about interest rates. Yesterday, pre-getting this data, we saw that the CME Fed Watch tool was basically guaranteeing a rate cut in mid-September, and that fell very slightly. But when you look at what it did to the markets today, it was a pretty muted reaction. At first, you saw the Dow fall a little bit this morning, but then the S&P 500, that broader index that so many people are invested in, that actually notched its third record high in a row. And so overall, the market's digesting this information, not terribly dramatic. You see the Dow today closing just slightly in the red, relatively even. But all of this goes into the calculation for what the Federal Reserve will do when it comes to the interest rate, and they've got to be handling and juggling these two mandates, right? The labor market as well as prices and inflation, Nancy.
Yeah, you talk about that big decision coming up next month, and it's not just about the PPI, but also the CPI, the Consumer Price Index, of course, released just a couple of days ago as well, and that was on Tuesday. So what's the sense of those numbers combined with these figures today? What does that mean for the decision?
Well, it really looks like for people who are paying every single day, you're dealing with your bills, right? Your weekly bills, your monthly bills, things remain expensive. And in certain areas, services continue to get more expensive. So that's going to factor in as the Federal Reserve is looking at this body of data into what it actually means for how they want to cut, how much they want to cut, or if they want to cut at all. And so looking ahead, I can imagine that, every member of the FOMC is looking at this information very closely to dissect what's happening here, because it really depends on what you're buying when it comes to what is getting more expensive. But what we learned today as well is we got weekly jobless claims, and that was an interesting data point as well, because it shows the softening continues. It was better than expected for Wall Street, but it still shows that the market and the labor market is kind of on hold, and there's a lot of holding back when it comes to these new claims. But good news is it was 3,000 job claims, less than the week before, but still continuing to show that softening trend, as well as those broader concerns and shadows of concerns for the labor market.
Still, we'll take any good news wherever we can get it. Jo Ling Kent, thank you very much.
Thanks, Nancy.